Thanks so much, Cheryl. Staying on real estate, Wall Street is hoping today's Case-Shiller report will clear up some mixed messages that we've been hearing on housing. In the last week, we learned June new home sales were down 6.8%, but resales jumped 3.2%. Joining us now to make sense of it all, digital risk managing partner Jeff Taylor and Douglas Elliman broker Chris Leavitt. Good to see you guys. Welcome.
Thank you.
Thank you so much for joining us. Jeff, how would you characterize housing right now? What are you expecting from Case-Shiller? It's out in about 2 hours.
From Case-Shiller, I think we're going to see a modest rise. I think the good thing about housing is we have to look at the existing home sales. They're at the highest point since 2007. The recovery's happened. And there are certain areas where prices are still much higher than others, but that's more of a supply and demand area. I think the housing market really is stabilized.
And you're in the middle of it all in Miami. How do you see it?
We had a banner June, the biggest sale history in June.
Wow.
In Miami. I think the last sales volume that high was back in 2005. So we're doing very well, and that is existing homes.
No lack of momentum in Miami, right?
No, absolutely not.
But how about the new housing supply, right? I mean, is it picking up pace? Is it coming out in Miami or elsewhere? Is it going to slow down the price appreciation that we have seen?
I think some of the new housing supply, it makes up about 8% of the market. And I think that's really where the millennials are going to go to, because as a home builders really look to have a strong
The millennials, you say?
I think so, because the home builders are going to be building towards that target market, and that's a first-time home buyer that's currently been out of the market right now. They can build an affordable house and get into the market. So I'm actually seeing that might move that 30% first-time home buyer up closer to 40 by this time next year.
Does what's happening in Miami that Chris is talking about, is that indicating anything broader for the country, or is this just a Miami story?
It's a little bit of an anomaly, I think. The building that's going on in Miami right now is all luxury, high-end. So the millennials are really not able to afford those unless the deposit structure would go down a bit. It's 50% down to buy in these new construction properties in Miami.
Is it right? 50%?
It is. So that's a huge nut to deal with.
Yeah, I totally agree with Chris. I mean, Miami would be a very tough place for a first-time home buyer. I moved back 2 years ago, and it took me a year to find a house. And I think 62% of all purchases in Miami are cash.
Absolutely.
Miami's really become one of those 10 cities in the world where it's like it's a destination spot, and people are coming from all over the world. So
you're
top
seeing more
3 city for international buyers.
But you're seeing more U.S. buyers in Miami.
Yes, 20% since last year. 20% since last year. Rise in buyers from New York City.
From New York City.
Yes.
I just wanted to add one thing. We saw the new home sales and the existing home sales numbers. What might be going on there is that you've got median home price and existing home sales is back at a new record high, right? So you have more homeowners that are willing to sell, that are stepping up, putting their homes on the market, and people are gravitating toward those homes. Those sellers are willing to negotiate. Historically, a lot of these new home builders haven't been willing to negotiate. So they need to step up if they want to move the inventory that they've got.
You're absolutely right. Incredibly. Yeah.
And the other issue is credit standards, right? So clearly millennials are not going to shell out 50% for a Miami condo, but if the millennial home buying is going to pick up, credit standards have to relax. I think we have seen that already, but what's your take on it?
I agree. I mean, look at the Fannie Freddie 97% loan-to-value programs, right?
Are they back?
Yeah, they're back. And those are so the millennials can basically, on a $200,000 house, if they can save $6,000 to $7,000, they can get into a house. So I think that's a very affordable program. The good thing with the credit standards are they're loosening a little bit, but they're really responsible, really smart. We're nowhere even close to coming back to where we were in 2005, 2006.
What does this all mean for the Federal Reserve? We have a 2-day meeting that the Fed is beginning today. We won't have a press conference tomorrow, but we'll get a statement from the Fed. And this is really their last opportunity before September to signal if a hike is coming in September or is it going to be later on in the year? What's your prediction?
To me, the most important paragraph of the statement tomorrow is going to be the first paragraph. Yes, we will see a note on there that housing has picked up pace a little bit into the summer months. But what I'm looking for is how they characterize that momentum, because there's no denying that we are close to full employment. But do you really raise rates when the momentum towards the end of the second quarter slumped? I don't think that's the case. I think they lay out the framework for what needs to happen between now and September to raise rates, which is you've got to see that pickup in momentum in more than just housing.
And we keep talking about the housing market still as a national market, but more than we're starting to finally see the strong pockets of growth like Miami. But there are a lot of areas that are very weak with a lot of inventory on the market and prices that are very soft.
What do you think from the Fed?
I think with the Fed, honestly, in September, we have to get past that first interest rate hike.
So you think they're going forward?
It's like 8 18 months, 2 years, we've all been calling for. I think that for general markets, we have to have that first hike. I think it actually caused a little boom in the housing market for a short period of time, those trying to beat the second rate hike. And then I think it sort of evens out and also sends the right signal across the country for a healthier economy.
But will it hurt things? When rates go up, does that put a crimp into this booming business that you're seeing?
Well, it may a little bit because, the credit standards are still so high. So you have the higher rates and then the credit requirements also. So you're sort of creating a little bit of a tension there. So I don't know. It's hard to say. In Miami, of course, everything's cash. It's 60% cash. So I don't know if it will affect Miami luxury market as much.
All right. We will. Yep.
I think more housing market. Interest rate rise a little bit. I think we're going to see more entrance in the housing market.
That's what we need.
That's what we need. Some outside entrance.
Getting up off their duffs.
So they'll basically say, oh, okay, rates are going higher. Let me get in now.
Right.
That urgency comes back.
Right.
And some lenders, too. Some outside lenders.
Jeff Taylor, Chris Leavitt, great to see you both.
You too.
Thank you so much, gentlemen. We'll see you soon. Thanks so much. More